Ladies and gentlemen, good day and welcome to Agarwal Industrial Corporation Limited Q3 FY22 earnings conference call hosted by Hem Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone telephone. Please note this conference is recorded. I would now like to hand over the floor to Ms. Astha Jain from Hem Securities Limited. Thank you, and over to you, ma'am.
Thank you, Momita. Good afternoon, ladies and gentlemen. Thank you for joining the Agarwal Industrial Corporation Limited Q3 FY22 earnings conference call. Joining us on the call today are senior members of the management team, Mr. Lalit Agarwal, Full-Time Director, and Mr. Vipin Agarwal, Chief Financial Officer. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would now like to hand the call to Mr. Vipin Agarwal to commence sharing his thoughts on the performance and strategic progress made by the company. Thank you, and over to you, sir.
Thank you very much. Good afternoon and a very welcome to everyone who has joined us today. I take the pleasure of welcoming you all to the Q3 FY22 earnings conference call of Agarwal Industrial Corporation Limited. Let me start by giving you a brief overview of the company's business, and will then take you through the financials. We'll then be happy to take questions if you have any. Agarwal Industrial Corporation is an integrated infra-ancillary company focused on a wide range of innovative bitumen products, backed by their world-class logistics infrastructure, which comprises of 5 large marine vessels having a total capacity of about 29,500 metric tons, and we have a fleet of more than 650 vehicles, in which we have 350 bitumen tankers and 300 LPG tankers, and we have 7 bulk storage facilities with a total storage capacity of 30,000 metric tons, having direct access to shipping networks located at Hazira Port, Mumbai Port, Dighi Port, Haldia Port, Mangalore Port, Karwar, and Hazira. We, along with our subsidiaries, have 6 manufacturing facilities located at Vadodara, Taloja, Belgaum, Hyderabad, Guwahati, and Kochi. Coming to the third quarter of the fiscal year 2022, we reported an 83% rise in the total revenue to rupees 380.90 crores in Q3 FY22 as compared to rupees 208.16 crores in Q3 FY21. The revenue has seen a growth of 123% in Q3 FY22 compared to rupees 158.95 crores in Q2 F22. The company posted a 93.5% jump in the consolidated net profit at rupees 20.61 crores in Q3 FY22. The company's net profit in the year ago period stood at 10.65 crores. On a sequential basis, company's Q3 FY22 PAT surged 381% from rupees 4.28 crores. The earnings per share of the company jumped to 17 in Q3 FY22, which was at rupees 10.38 in Q3 FY21 and rupees 3.53 in Q2 FY22. Further, I would also like to add that the demand trend continues to be favorable across the infrastructure industry, which is quite exciting for us. Our customers understand and appreciate the company's execution abilities, which constantly results in the financial growth in the market share. We continue to demonstrate profitable performance in long term to the relentless focus on leveraging our 2 decades of experience in bitumen and logistics. That concludes my opening remarks. I would now request the moderator to open the forum for questions from the participants. Thank you so much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Participants are requested to restrict to 2 questions per person in the initial round and may join back the queue for further questions. So our first question comes from Mr. Mohit Nigam. Please go ahead, sir.
Good evening, everybody. Congratulations to the management for such robust numbers. Many congratulations on that part. So my first question is that we have seen an extraordinary budget in which we have seen a lot of focus on capital expenditure, infrastructure growth. And in our investor presentation also, we have mentioned that we are seeing a CAGR of around 30-35% on this front, on the sector front. So my first question to you is, how do you see our future, I mean, like in terms of revenue guidance, if you can share with us what revenue numbers can we look at going forward? And since this is an intense field now and there are a lot of eyeballs there to capture this space, how is the company coping up with the rise in competition, and what is our strategy to protect and nurture our market share? Thank you.
Thank you so much for your question. Firstly, as you have mentioned about the allocation in the infrastructure activity from the budget, here, yes, there is a very good scope as the government has announced a 30% increase in the infrastructure activities, amounting to about 1.8 lakh crores in the infrastructure activities. Here, yes, going forward, we will play a very important role as we are providing services to this infrastructure company. That's why we call ourselves as a infrastructure ancillary. So we are providing them end-to-end solutions for making for the roads, and the total roads that are expected to be made is about 25,000 kilometers. Going forward in the coming years, the focus that the government has put on the infrastructure activities, our company will play a very important role in providing the services and the product that pave the way forward to making these infrastructure activities a success. And your next question about competition. Yes, there have been a few companies that are bringing in small quantities, but the setup, the facilities that the company is having, I think no companies across Indian states are having the facilities we are having. So there is very small chances of any other competition arising to the level that we are at.
Okay. So my second question is, since we have seen a jump in crude oil prices, I mean, in the last quarter, it was hovering around $75-80 a barrel zone. Now it is around $90-92 a barrel zone. So are we deploying the hedging strategies to protect our margins going forward in the bitumen space? And if you can shed some light on our topmost selling product and its revenue contribution, that will be it from my side.
Thank you. See, firstly, I would like to mention here, there is no direct correlation of bitumen price with the crude. Yes, there is a relation, but it is not that if crude jumps to about $20, then bitumen price has to jump by $20. So it's an indirect correlation, but yes, there has, as you mentioned, when it was at 75 levels, the crude had gone down to even to 65 levels again, and then it bounced back to 92 levels. So it hardly matters, because whenever the prices of bitumen goes up in the international market, in India the prices goes up by the same percentage in the next 10 to 12 days. So there is no impact on the margins that by increasing in the rate international prices, hardly any impact on the side of procuring material and selling in India, because here in India domestic market prices go up.
Okay. Thank you so much. No, thank you so much. I'll wait for the next round. I've asked my set of 2 questions. Thank you so much.
Thank you so much.
Thank you, sir. Our next question from Mr. Piyush Saikia from Raison Capital. Please go ahead, sir.
Good afternoon, everyone. Thank you for having this call. We're very impressed with the kind of results that the company has produced. But like you said, that there is an impact on the price of bitumen in India when crude prices rise in the international market. So since our revenue has grown 80%, I'd like to understand what part of it comes from volume growth and what part of it comes from price growth. And what is the kind of volume growth that we are looking at over the next 2, 3, 4 years?
Thank you so much. We have always focused on increasing the volumes. We have never focused on increasing the top line. Our aim is always to gain maximum in the volumes. Ultimately, our top line increases. And as far as the volume growth is concerned, we have been growing at about 18 to 20% on an annual volume growth. But since this year the prices of bitumen is on the higher side, the top line is relatively higher in terms of percentage.
I get that. And in terms of barriers to entry, the previous question was talking about competition. If you could just throw light on, so I read in your presentation that we have 650 vehicles which is servicing the bitumen and the LPG market.
Yeah.
If you could give me some idea on how many vehicles would the second largest competitor or the third largest competitor have? Because I believe that's a huge barrier to entry for any person to enter into the bitumen market.
Yeah, I think the next company who would be having so many vehicles would be about, I guess, not even 200. But they do not have the facilities that we have. We have an end-to-end solution wherein we are procuring directly from an international market from the way the source we procure. We procure the material, we bring the material in our own designated voice chartered vessel into our own leased tankage, own tankages. From there, we take it to our factories for manufacturing different grades. From the factory, we manufacture different grades and supply to our end users in our own logistics. So all this integrated forward and backward integration services that we have in-house, I think none of the companies in India is having that much of facilities. They can have either of the services with them. They can either purchase material, or they can either store material, or they can either transport material, but they do not have all the services in under one roof. So that is a very important and the biggest barrier that anyone can have in India.
I get that. And in terms of volume growth, we're doing 18%, 20% a year, you said. But do you see that accelerating over the years coming by with the kind of push on infrastructure spend that has been coming about from the government of India?
Yes, we do. So as you can already see in our numbers, and as we are growing at 18-20%, so every year the additional import that is happening, it is through this only, and that's the reason we are also growing in volume. We used to do about 150,000 tons earlier. Now we are at about 350,000 tons. And domestic production of the refineries is limited to 5 million, still limited to 5 million tons only. All additional volumes will be catered only by imports. In fact, we are the ones who are supplying to even PSUs.
Correct. And in terms of our fleet of ships, how much of our usage is captive, and are we giving out our ships on charters to make additional revenue?
There is absolutely no captive use of our vessels. We are giving it to third parties on voyage basis for chartering. Voyage to voyage charter basis.
Okay, but why wouldn't we transport our own product in our own ship?
See, I can demand a higher, voyage freight than from others than what I give to my other current supplier. So I can run my ship efficiently and at a better margins. I take vessels from the market at a lower rate and give my vessels at a higher rate.
Got it. So we're making money off that as well.
Yes, because the volume that we are having, so any big supplier who's having vessels, he definitely quotes us on a lesser level. You understand the synergies of volume.
Got it. Thank you very much. That should be it from me. Thanks.
Thank you so much.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. Our next question from Mr. Abhishek Sharda. He's an individual investor. Please go ahead, sir.
Hello. Yes, sir. First of all, congratulations for great set of numbers.
Thank you so much.
My first question is that our operating margins had seen some pressure in this quarter. Around 150 basis points decline from quarter last year. And also the operating margins of our majorly contributing revenue segment, petrochemicals, this has also declined. So what is the main reason and what kind of margins you see sustainable in long term?
Basically, I would correct, sir. It's not a petrochemical business. It's an infrastructure ancillary business.
Hello.
It is an
So you want
infrastructure ancillary.
We are an infra ancillary company. It's not petrochemical.
So,
Okay.
To answer your question, the margins were under pressure due to competition, increase in competition and this crude oil price fluctuations in this quarter.
Okay, sir. And sir, since now this infrastructure sector, like a lot of been given a budget, so a lot of small companies will also come in this infrastructure. So right now our revenue segment, right now our market share in private player is around 18 to 20%. So what kind of strategy?
24 to 28% now.
Okay, sir, that's fine. So 24 to 28%. So what kind of strategies we are like developing to sustain at these market share or increasing market share?
Yeah, see, the infrastructure setup that we are having, so we don't have to add any extra additional facility to increase our volumes. It is only one step that we have to add to our current cycle that we are doing is to add more vessels in the voice side or in the company so that you can bring in more product. Because today also there is a lot of demand of this product in India due to the active infrastructure growth. The more the product we can import, the volumes will definitely increase more. And when you are increasing the volumes and to capture the market, you have to pass on a little bit more discount to the current companies that you are dealing with. When you are passing on additional discount to the companies, your margins tend to come down a little bit, but your volumes will increase. So that is one of the reasons, apart from the crude price fluctuation, why the margins, not on the overall, but yes. And if you say overall, there has been a bunker price increase in the international market, which has affected the shipping business. So whatever percentage was there in the shipping business, it has come down a little bit, which has ultimately, in the control level, contributed to the operating margin that you were discussing.
Okay, sir. And sir, what kind of market share does the second highest player in private bitumen industry, what kind of market share does that player have?
He is at about 60% of the import that we are doing. So if you are doing 2 lakhs, he is at about 125, 130 maybe.
So basically we can assume that if you have around 24% of market share, the second player is having around 10% of market share, right?
10, 12, more or less, a percentage here and there, but yes.
Okay,
60% of levels at what we are.
Okay. And sir, my last question is, sorry I missed in the previous, can you please share the bitumen volumes done in this quarter, Q3 FY22, and what is its year-on-year growth? Bitumen volumes.
We have done close to 300,000 tons.
300,000 tons. And in the last quarter, you have done 110,000, right? If I'm not wrong.
No, 165 or 175. No, 192.
192 in last quarter.
Last 6 months, second half. One second. I will come back to you on this question because I need to give you the exact numbers. So I will not give you.
Okay, sir. And what is our target for Q4 FY22 bitumen volumes target?
I will not give you any numbers, but yes, if you have seen the results, the volumes that we have already done, I think we would be at anything close to you can say 20% growth on what we did last year.
20% growth on what we done last year.
Yeah.
Okay. Okay, fine, sir. Thank you. I'll come back in the queue then.
Yeah. Thank you so much.
Thank you, sir. We have the next question from Mr. Gagan Dikshit from Elara Capital. Please go ahead, sir.
Yeah, thanks for giving me the opportunity, sir. Sir, what are your this CapEx plans for this?
So can you just increase your volume a little bit? I think we are not audible.
Audible now, sir?
Yeah, now it's okay, yes.
Yeah. So, sir, what are your CapEx plans for FY23 and FY24?
See, we don't need to do a large CapEx because whatever normal 10-15 crores CapEx that we do every year that we are already doing, yes, only if we are acquiring more additional vessels, then there may be an additional CapEx, but that is not very certain whether it can happen in last quarter of 22 or next year. It all depends upon the opportunity that we get at a good rate if we get any vessels.
Okay, sir. And sir, is there expanding the fleets also? I mean, from the current around 350 bitumen fleet or
I think we are at a good level. We don't, but yes, the 10-15 vehicles here and there, they keep come and go because of the age factor. But it will not, the vehicles rate will not increase to a great, say, by 10% or 20%. But yes, 10-15 vehicles here and there we keep purchasing and some old vehicles deplete.
Okay, sir. Okay, because when I follow the government plan about this road infrastructure, so it looks like that 15 to 20% might be the industry is growing. I mean, road construction industry. So might be. I thought you also need something to catch up, at least to maintain the market share.
Yeah, and for that we have adopted a different strategy where we are trying to overutilize the facilities that we are having. Instead of underutilizing, we are trying to overutilize the vehicles, the fleet that we have. So the more turnaround that we will be able to do with our logistics, it will earn in a higher revenue and profitability rather than buying a new ones.
Okay, sir. Okay. And sir, when I see in the presentation that you out of 650 fleet, you have around equal share of the LPG and the bitumen.
Yeah, more or less it is. Yeah, more or less it is on the equal side.
Yeah. So can I assume that the revenue contribution is also similar, or it's more towards the bitumen side?
No, it is about similar. Yeah, if you terms in absolute percentage side, it is almost similar. But yes, if you have to convert into values, maybe 3-4 crore rupees up and down between the two.
Okay, sir. Okay. And sir, last question is that what is the reason for the margin expansion in the current quarter, sir? Any specifics, sir?
Sorry, can you come back again, please?
I mean, the reason for the margin expansion in the current quarter, sir, is it anything because of some inventory gain also, or purely because of the volume thing?
It is cumulative. Not only inventory gain here, but in this quarter there was actually on the if you put it on paper, it is not directly inventory gain, but yes, because of the rising prices, we have kept our inventories at a certain level where we are able to sell at a higher rate. The cost of product is less, but when we are selling it, yes, it is of course on the higher side.
Okay. Yeah. That's from my side, sir. Thank you.
Thank you so much, boss.
Yeah.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Now, our next question from Mr. Balaji from Tech Equity Wealth Advisors. Please go ahead.
Can you repeat, please?
Yeah, hi. Good evening. This is Balaji Jayaraman from Tech Equity Wealth Advisors. Sir, historically, my understanding is your business is at its peak during the period of Q3 and Q4. And Q4 is historically the best quarter in terms of revenues, which you had informed in the previous calls as well. So can you throw some light in terms of what we can expect in Q4? Of course, I did hear that you had mentioned to one of the earlier person that we can look at 20% growth on last year. One of the other things also I just wanted to understand, sir, I went through the footnotes on the results that was there, and it was mentioned that the results will be, even better going forward. So can you please suggest what gives that confidence? Throw some light in terms of what gives that confidence that, the results will be better going forward.
Thank you so much for the question. See, usually the peak period for the company is the Q4. The confidence is coming from the experience that if we are able to do in the first 9 months that what we have achieved. So the Q4 in terms of demand, even if there is no infrastructure boom, but because of the cyclic demand, the Q4 demand is always robust, and it contributes almost to about 30% of our total revenues every year. So in Q4, if we are able to do, say, about 950 crores in the first 3 quarters, I think usually about 40% comes from the Q4 of every year. You can imagine what we can get in the Q4 quarter in the current year. That is where the confidence is coming from, apart from the activities that are there in the infrastructure activities boom that is happening.
Okay, sir, and how will that translate into the subsequent quarters? Do we expect some kind of a normalization going into Q1 and Q2 of next year, or do we expect the momentum to continue?
Momentum continues till Q1. So the Q1 and the Q4 is usually the peak period. Apart from in the June month of Q1, April, May, it's quite exciting because the volumes are high, and Jan, Feb, March of Q4. So these 5 months are usually on the peak side.
Okay.
And the momentum will continue because of the activities. You also know what is happening in the infrastructure space. And we, being an infrastructure ancillary, we are providing so many services to these infrastructure-related activities.
Wonderful. Thank you very much for the opportunity, sir. Wishing you good luck.
Thank you so much, sir.
Thank you, sir. Our next question from Mr. H.P. Bhatia from Sucrit Investments. Please go ahead, sir.
Hi, thanks for the opportunity. I had 2 questions. One was, could you give just some guidance on the chartering business? And I think where do you see it going ahead in the next 2-3 years? And how do we see growth and margin expansion in that? And so the next question was, could you give us the breakup of our clientele, specifically where is our major concentration of bitumen supply? I understand it's the road construction companies, but the private players, the government, and what exactly is the breakup of a clientele, sir? Thank you.
Thank you so much. I'd like to address the first question first. With the chartering business, as you see, we have been adding few vessels here and there. And the 5th vessel that we had acquired, it has added to the current revenues in this current Q3. And there has been a strong growth in terms of shipping because it is that all our vessels are deployed throughout the year. So the more efficiency that we get from running our vessels, it will result in a higher revenue and bottom profitability. But yes, there has been a constraint from increasing bunker prices. So that is one of the reasons that the revenues and the profitability is not in line with what we had achieved in the last 9 months of the same FY21.
So, sir, is it transitory or do you see?
It is transitory because basically fuel oil is bunker prices are directly linked with the crude. So if the crude come down to about 75 or 70, the bunker price will naturally gradually come down. But the freight remains the same, more or less the same.
Also, and sir, are we clear on our plans that we want to give our chartering business only for petroleum products or also for some other logistic?
As of now, we are only into this petroleum, especially bitumen.
Okay.
And addressing to your second question was on the clientele, right?
Yeah.
Yeah, we see, as I mentioned earlier, we are supplying to PSUs, we are supplying to BPCL, we are supplying to HPCL. Moreover, even in the logistics sector, our vehicles are deployed with IOCL, BPCL, HPCL, Our other clients are DP Jain, DR Infra, JM Matre, Shapoorji. All the big infrastructure road construction companies are our clients.
So, sir, what would be the percentage of how much would be the PSUs and the private sector? If you could just give a number to that, please.
Basically, in infrastructure, everything is a private. We don't take government contracts or we don't supply to government.
Okay. Because there was a article once that we had signed, I think, a contract with
NSIC.
Yes.
Yeah. So we are supplying to NSIC as well. Okay. That is the government body who supplies to MSME infrastructure companies through us.
Okay. Okay. And sir, also could you please give the cash in hand numbers for the quarter, or what would be the cash in our books right now?
Cash. We are not given that number because the balance sheet is not given. Cash in the book.
For that, you can mail us back and we will provide you the details as required.
No, if
it is
sensitive information.
I think 45 crores in our hand.
I would really not like to comment on that as of now because since it is not in the declared results.
Okay. No issues, sir.
Thank you so much.
Thank you. That's all.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our next question from Mr. Rahul Agarwal. He's an individual investor. Please go ahead, sir.
Yeah, hello. Thank you for giving me the opportunity. Pardon my ignorance, I'm not very conversant with your business, but just wanted to understand, going forward, is there any scope of any value addition in your products to gain higher revenue and more margins?
Thank you so much. See, we are already producing maximum products that we can from bitumen. And any other R&D that we are doing and any other product that is being introduced in the market, we are definitely producing that product also. Either we discover some product related to bitumen or there are other companies who are manufacturing, and if there is any new addition in the market of a different product, we do manufacture all those products as well. Because we have the infrastructure facilities to produce any grade from bitumen.
Okay, fair enough.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So we have our next question from Mr. Balaji from Tech Equity Wealth Advisors. Please go ahead, sir.
One quick question on the promoter shareholding. It has actually dipped in the last quarter. Any specific reason why the promoter shareholding has actually gone down?
Promoter shareholding has not gone down. In fact, the promoters are holding warrants.
Okay.
There is no sale, actually market sale from the promoters.
Okay, because September quarter I'm seeing the shareholding at 60.11% and June quarter it's about 61.4%. The last December quarter it is at 58.57%. So just wanted to understand why there has been,
there was a warrants issue.
Okay.
Yeah. There was a warrants issue to the promoter itself, and which are not converted as of now. So that's why it is showing as a lower number.
Okay.
There is absolutely no sale of shares by the promoter.
Not a single share has been sold by a promoter.
Fair enough. Thank you very much.
Thank you so much.
Thank you, sir. The next question from Mr. Shubhrata Sarkar from Mount Infra Finance. Please go ahead, sir.
Yeah. Sir, sorry, it will be very basic question, and I don't know whether you have answered it or not. Sir, can you give some futuristic like margin guidance or whatever to understand as what can be the like stable state margin for this business? Because I am very new to your company. So basic question, very margin guidance and what kind of growth we are looking for.
Our margins will remain more or less the same at the same levels what we are achieving right now. And the growth also, if you would have heard our comment, it will be at the same levels, 18 to 20%, 15, 18% range. The same growth levels we will be trying to achieve.
Okay.
And the margins, more or less, it will remain plus minus 0.5 basis points. It will remain the same.
So, sir, it is not really linked to crude or whatever is there, you can pass it on.
Just now, Vipinji has answered it, that it is not directly linked, though it gets impacted, but it is not directly linked to the crude prices.
Okay, impact is not immediate, actually.
It is a delayed impact.
No, I got it, sir. It is delayed impact, but what I mean to say, if there is a change in raw material and crude price, ultimately it will have some impact. So can we, since like we are supplying to like a few government organization also, so can we pass on that?
Correct. You mean to say, will it impact our purchases and the margins?
Yes. Maybe after some time, but sir, my only point is like, if there is a ultimately rise in raw material crude price, there will be some delay in impact, but ultimately raw material price should go up also. So in that case, can we pass on that, because we deal with government like organizations? So can we pass on, or sir, that to understand on a little bit on a better manner? So whatever we are supplying to this government refineries and all of them, so is it on a tender basis and we need to quote a price and then we link it, or and that has a escalation clause, or what is the pricing mechanism there, sir?
Thank you so much. Firstly, whatever prices, international prices are rising or going down, it directly impacts the Indian market pricing. So every fortnight, the prices in India are changing according to the international pricing, plus the exchange rate fluctuations, if any, in the dollar also. So if there is an increase in the international market, in the next 10-12 days, the price in India will also go up. And simultaneously, if the prices in the international market goes down, in India also the rates will go down. To address your first question, yes, whenever the prices are increasing in the international market, we hold our inventories at a higher level so that we can achieve the maximum when the prices are increasing in the next fortnight. And vice versa, whenever there is a decline in the international price, we try to keep the inventory at the lowest level so that whatever we are selling as on date is at the current pricing in India. And when the prices in India changes, we have the lowest cost affected product already imported into our tanks. And as far as the PSU tenders are concerned, yes, they do have a formula wherein it is directly linked with the international prices as well. So there is no impact on the company's profitability at all.
Okay, sir. Okay. Thank you. Thanks for my side.
Thank you so much.
Thank you, sir. Ladies and gentlemen, that would be the last question. I would now like to hand over the floor to Mr. Lalit Agarwal, MD of Agarwal Industrial Corporation Limited, for closing comments. Lalit, sir?
Hello.
Please go ahead, sir.
Yeah. Thank you so much to all the participants for joining the call. I hope we have been able to satisfactorily respond to all your questions. It was a pleasure to interact with you and get your queries addressed to your satisfaction. If you have any more questions, please feel free to contact us. Thank you once again, and we look forward to connecting with you in next quarter with good results. Thank you very much.
Thank you, sir. Asama?
Thank you, sir. On behalf of Hem Securities Limited, I thank Agarwal Industrial Corporation Limited team for giving us a detailed insight on the results and the time they spent on this call. I would also like to thank all the participants for joining this call. It was an extremely fruitful discussion. Thank you all for being on the call. I would like to hand over the call to the moderator.
Thank you, ma'am. On behalf of Hem Securities Limited, this concludes the conference call for today. Thank you for your participation. You may all go ahead and disconnect your lines. Thank you and have a good evening, everyone.
Thank you so much to everyone.
Thank you. Thank you.
Thank you, sir.